There were three important factors this week: China, China, and China. Sant Manukyan, IS Investments. Sant, let's begin with the euro area economic sentiment. It rose to its highest level in 5 years in December. However, inflationary pressures still remain. Do you expect the ECB to announce further stimulus in the near term?
Honestly, I'm not sure if that is confidence towards the economy or to ECB, and I suspect it's the latter. And yes, obviously, inflation is still an ongoing problem. This week we had a negative reading in Germany and weaker than expected readings in the Eurozone, which makes January CPI very important. And as you know, the level of euro has not changed a great deal since the second QE. Adding China worries, I would say ECB is on high alert and Draghi is looking for an excuse to gear up.
Australia posted another massive trade deficit in November. However, it was a slight improvement on October's figure. Do you think we will see these slight improvements going forward?
Well, in November, exports were up about 1% and imports down about 1%. And what I find interesting is trade volume is in a downtrend, not with China, as you would guess in the first place, but with Japan, US, and Korea. The Australian dollar will kick in the near future and cause some further pickup in exports. But clearly good days are over unless Chinese come up with a huge stimulus package.
US unemployment data and non-farm payrolls are scheduled for release shortly. What are you expecting to see and how will the US dollar perform?
So I would go with the market consensus. We had a strong employment reading in ISM services and a weak one with ISM manufacturing. However, manufacturing jobs make up about only 8.6% of total employment. What really counts is the average hourly earnings, which are compared to previous expansions are still very modest. My expectation is higher than the consensus, which is 0.2%. Unless we see a number equal or higher than 0.3%, I don't think USD will be beat a lot. And of course, if a weaker number is received, then there will be a sell-off, as usual.
And finishing up then, what other important economic data releases or events stood out for you this week?
I would say there were three other events: China, China, and China. I was happy to see U.S. service sector expanding in December, and we all did follow the FOMC minutes. But the markets were obsessed with the Chinese PMI and, of course, renminbi. Declining Chinese FX reserves were eye-catching as well. So I would say it would be fair to say this year markets will be equally interested, if not more, in the Chinese data as well as further U.S. rate hike potential.
Sant, it was a pleasure. Thank you very much. Well, that is all for the moment, but do click back for more news, interviews, and of course our usual Friday at Community Stars. From me, Louise Macaulay, it's goodbye.